Hey guys, this is Latorian Paul, your mentor here. And today I want to talk about the trades that I was able to catch using supply and demand zones. I posted them to my page earlier, and as you can see, I'm still practicing. I was thinking about something that we see a lot for the Olympians, for people who do Olympics. If you are not practicing more than you are actually doing the thing live, you're doing yourself a disservice. Just want to say that. Um, but let me just show you what I saw today. Um, Supply and demand zones. So this trade obviously may go against me, but this is why you practice. Um, Let me see. The reason why I took this trade, just for FYI, is because of the a slight demand move. It's real slight. So, like I said, it could continue to go up, but like I said, this is why I practice. This low broke these lows, and it came back up to the highs, and hopefully it'll go down. If not, this is why you keep practicing. But this is not where I want to I don't want to focus over here yet. This is just something I wanted to mention. Um, I want to focus on. Let me see here where I was at. Okay, here we go. All right. So earlier I was, just marking up demand zones, and I noticed. Okay, like for example, this move right here. This move right here. Not this one, but this one. Pushed up. So what I did was I paid attention to this area, and this was on my phone, so I wasn't able to mark it up earlier. But I paid attention to this area, and I just went to the high of the candle right there. All right, and so when price came back to that area, go a little wider and go a little bit more for whatever reason. I don't understand why this does this, but you have to adjust from the right corner. So when the price came down to this area again, I bought. All right. And then when price came back up to this area, it'd be better on a 5 minute. I tried to not have to use a 5 minute, but it's a lot better on the 5 minute. All right. So this was a nice little supply move. Actually, this is a lot more accurate here. The price came back down to this area I bought. But this is a demand move. This area is a supply area. So I took, I think it was like three trades. Yeah, it was three trades, I think. Yeah, three trades. Demand trade, a supply trade, and then a break and retest trade. So when price came back up to here, this area, I sold. All right, I had this one, this trade here for the buy for like 140, 50, and then this trade for the sell back down to the same area. And then I had this break and retest trade here because it broke these highs and retested, right? Broke those highs and retested. And so those were the three trades that I took. The first two was off supply and demand setups as far as the zones. And then the second one was just off structure, the break and retest of, I don't know why I used to do this, the break and retest of um, structure change. And if you're not sure, look at my page on Facebook and you'll see it's for today. And I'm showing you before and afters. And I'm showing you the trades and the entries and the profits that I've made. And obviously it's our practice, but you're only as good as you were on practice. So today I want to also expound on the benefit of um, especially with gold because gold does more of Um, gold does more of supply and demand zones than break and retest. That's just what I've noticed. You get better. You get better. You have better positioning, um, especially when there is no break. When you go in between two different sessions and the trend hasn't began, it's better placement when you go for supply and demand zones than the support and resistance trades. All right, so this is one that I want to show you. So you had this major supply move, price went down, boom, price comes back up into this area. You look to go long, you go short. That's really all there is to it. And then if you don't get this, then you see the break and retest opportunities. One here, you're literally just looking for entry at structure points. One there, and see how it goes a little bit higher. It gives you two break and retest opportunities, and then it comes back to give you a supply zone entry. And this is why you have to be mindful of that, because if you're not careful, you can get stopped out taking the trade too early. So if you got in here thinking it'd be a third break and retest entry, you would have got it'd been 200 and something pips, 213, 14 pips of drawdown. Whereas if you just wait, it's better. Like I said, the positioning for trades are a lot better when you go for a retest of a supply zone, than rather than always going for break and retest. Okay, especially on gold. Now, if other pairs are not as volatile as gold right now, um, but if you're going to trade gold, just the best trades are the ones where you wait until uh, a supply in this case has been retested, because this is the difference between 240 pips, a possible drawdown, and 100 pips, 100 pip difference just by waiting a few more minutes before you enter the trade. And then, like I said, that supply and demand. So here's the one, price after all this move, price comes right back down to where it initially took off from. You had this major demand move here. So you mark that up, the body of the move, and price comes back down to this area, right? And then it goes out, which means it came through, it pushes out, which means it respected this area. And technically, this was a demand zone. And then, honestly, even with all this, had I seen this demand zone, I would have taken my trades here and had an even better entry. Let me see here. I would have gotten to this demand zone because it was demand. It was definitely demand. So this area, because of this move, pushed it up. Price came back down into the zone. I would have entered here for the buy, either one of these points for the buy, put my stops down here, and had all this movement and been done for the day. I mean, you're talking about, as far as stop loss, about 300 pips, a 300 pip stop loss till about 1800. It's like a 1 to 6, a 300 pip stop loss for 1800 pips of profit. Um, and that's using, um, waiting rather to see whether price will retest the supply or demand zone, instead of always looking to enter off of the support and resistance, depending on what has been created off the market structure. So here's another one that I wanted to point out. And take the time and you look at what's happening. You have a demand move. If you have a demand move, you have a demand zone, right? The demand zone would be the candle that caused the move, and that everything to the left as far as the body. And you have to go too much far to the left, probably two or three candles. You want the body of the move, that includes the candle um, of the move, and that's your zone. Price comes back into that. You put your stops under the previous low, or depending on how confident you are in your trade, you don't have to put a stop loss. I know some people that don't trade with stop loss. That's a lot of experience and a lot of confidence and strategy. Here's a more shallow one, and it looks small only because it's on the 15 minute, but on the 5 minute, I'm pretty sure this will be a good area. So you had this move down, you had this move up. So all of this was a demand move. So what I want to do is go January 20th and go to the 5 minute chart, see how that looks on the 5 minute chart for clear. Okay, say cool. And this is why you have to be able to, because it looks clearer. Because on the 5 minute, on the 15 minute chart, it looks like it's a small move, nothing's really happening. But as you can see on the 5 minute chart, it's clear. So price broke above this zone because the demand comes back into it, and you have like a not even a 50 pip stop, 6 pip stop, and that one entry from see if I can get it in the window. All right, so this entry is a better entry than this, but obviously we are all not up at the same time of day. So entry here is like what's that? Almost 1,000 pips. Let's just say 900 950 pips. So you're talking about a 50 pip stop loss with 950 pips. This shouldn't be on here. Cut you down. So what is that? 950 divided by 50. That's times 100. That's 1900. It's like a 1 to 19. 1 to 19 uh risk to reward ratio. And that's by obviously using um the supply. And as you can see, even with this trade, right, it's starting to make its move, right? And this is why you have to practice. You have to practice. You when you practice more, you don't get excited for um, the small things. You want to see your thoughts come to life. So I just think I'm in a couple of different cells here, but um, yeah, that's what we're looking for. So let's keep on talking about that. All right. Now here's a cool day. Now, obviously, you know, depending on your level of accuracy, level of ability, you might not have caught the gap, but here's a cool day where we see plenty of supply opportunities. You have this supply. Let's grab the wick, go over the body. All right. So you got all of this play, and comes in here, and you actually have both. That's the one thing about the range. You have both. You have supply and you have demand. So you had plenty of trade. So let's just say um I'm gonna mark up the supply zone, mark up the demand zone as well, so that you can see what I'm saying. So you have this demand, right? Now obviously you got ranging. So you got this one, so you could have took this cell down to here and bought back up. So now this one would have made me kind of focus more on the supply because this move here broke the lows of the whole day prior of all the sessions prior. It was this became the lowest point of the day at that point. And then price comes back up to the same zone. I'm selling. So you're talking about one, two, three, four trading opportunities. Really, you could have just focused on the supply alone and been good. All right, here's one. A lot of times, um, like I said, you got to just look at what's given, right? They will give you these moves to uh, the break and retest. They will give them to you, but the better trades are always the ones that go that come back to uh, test this will be a demand zone or the supply zone. All right, so let me mark this up real quick. So we have it's a lot. I'd rather just grab this one because it's under here. We have this zone. This is a supply zone. And show you why. All right. So anything in air supply. And then you have this push up, come back down. This is a demand zone. So this is a good ranging day. So you have this right here as your um, demand zone. And I'm pretty sure on the 5 minute chart you can see a lot clearer. Um, but nevertheless, you have price comes down, price comes back up. You can sell that. Put just this is a nice little stop, but put the stop up here above the previous high. Or if you're confident, no stops to each his own. All right, so it comes back down 300 pips. Once it comes back down into your area, not just into the box. Some people trade where they want to get in as soon as they hit the box, they want to get in. Hey, to each his own. But I want to see if it retests these lows, these wicks. That's the better of the entry. Anyhow, and then back to the Zot where it came from. So you talk about 300 plus here, 300 plus there, and you have better entries, like I said, because you're using um, supply and demand zones. Here's one. I'm gonna go show you a couple of different ones that I noticed. First of all, um, we have this demand zone created here, pushed up. So you're marking off the body of the move. Right. So this was a demand zone. Price came back in here, tap this. You could have gotten there for a nice low buy. And then everything up here, this was actually a supply move. Supply move created the opportunity for the demand trade. So if that's the case, even with all prices pushing up, you mark that. You mark all that, right? That's a um, supply zone, right? And then honestly, when price pushes down, you could have had an even better. Because honestly, I would technically do this whole thing. But that's too much. That's too wide of a spread or a gap. When price breaks, when price breaks the lows of the previous session for the most part, when it goes on, when it finally makes a move, then I would adjust my demand zone, my supply zone to be more efficient for what just happened, right? So I'm looking at that. Price comes back into there, obviously gives you the sell, and guess where that comes to? Demand zone. So this move up was a demand move. Come right back into that same demand move. And so you see how the smaller supply and demands help to shape the bigger supply and demand zones. And the more you see it, the more you will be aware of what's going on. And so, yep. So you got that. It came right back down to where it came from, to where it came from before. So we got in here, came down to there, 500 pip day, not bad at all. All right. Then you have these where it crosses over. Now, obviously, you got to be mindful of because I've seen some guys do their supply and demand zones where it's over so many days, and they just assume that because they got a box mark over a lengthy period of time that it's going to work because the box is marked. It's like no, it's better off the closer to the day, the next day, 24, 48 hours, especially depending on the time frame um, you're in. That makes a big difference as well. So you have supply down, demand up, all right? And so You had this high was higher than this high, so this is technically a demand move. All right, and then it comes right back down into that area. Takes a little bit of time for it to take off, but ultimately it goes up just off supply and demand. You see how I haven't mentioned any break and retest, but as you can see, you do have within the progression from supply to demand and back up, you do have break and retest opportunities, but those break and retest opportunities are even smaller versions of supply zones. Like for example, this one's a break and retest, but this one was a retest of this supply zone within, so there because there will be supply zones within supply zone. So all right, so if you got in here and you got in, you seen it pull back, and you just assumed, it's better to wait and see where price will stop pushing up before you enter the trade. You never want to assume that you know what the market is going to do. All right, so here's one the same day right here. Um, this was a demand move. All right, you want to take the body of the move, for example. That's the body of the move. Back up some. I don't know why it's doing that. Move you up some. All right, price comes back in. You buy. You're good to go. And the more you see it, the more you can unsee it. Right. So here's one. And all we're doing is looking for supply and demand. Supply is strong, aggressive selling. Demand is aggressive buying. All right. So we got this move. Pushed up. Actually, I need to grab from where it came from because it came from right here. So pushed up, came back in. This one entry, you were set into the next day. And also learn to not overtrade. Learn to not overtrade. Trust your process, and then also before you start adjusting stop losses to be in profit, look and see if you have structure to the side that you're trading. So if you're in a buy, before you put your stop in profit, look to see if you have something like this where you have a break a push to the upside, right? That way, if you put your stop in profit, you know you have a better chance that it has to come before it comes down to where you enter, especially if you got in here. This is a great entry. If you got in here, you want to wait until you see the move. Once you see the move, then you put your stops in profit, probably something like that. Nothing major. And then obviously being content because by the next day, if you got in here, this is a super sniper entry. If you got in there and you come back at the same time the next day and you up 1,360 pips, you definitely want to close that down because you want to get in a better trade. Now, depending on if you're swing trading or not, to each his own. But if you are in a trade where you're in a trade where you got in, took a dollar trade, and you didn't got up to $1,360 in 24 hours, definitely close that down so that you can get in better opportunities with a better lot size and ultimately be able to withdraw money. You gotta take some money off the table, or what's the point? There's no point in just seeing money run up and you don't have it in your hand. All right, forex is great, a great opportunity, a great way to make a living. But if you never withdraw any money, then you still haven't realized what you're doing. All right, so let's talk about this one right here. Another supply zone. Supply zone. You have this move. Boom. All right. So you mark that. That's a supply zone. Take this, go across, straight up supply. All this is supply. That's all supply. You got boom, boom, boom. So you see that push up, push down, then it pushed up, push down again. All right. So you had about two good trades. Two good trades. Um, and it's all profit, all profit. Yeah, I see these demand moves, but you just had this is the first day of the trend change. I would not be trading for safety wise mentally because this is definitely between sessions to even push back up to continue to go down. I wouldn't be trading both ways the first day of the trend change. All right, so we have um here's a good one because it starts here. You had a small demand move, then a bigger demand move. So I'm gonna focus on the bigger demand move because it's easier to see. So this bigger demand move, this is an area. This is why I say wait till it comes, see how far it goes because it came under the demand zone and went into the smaller demand move that occurred prior to the bigger demand move. So it came and went into here. This is the smaller of the two because this move called it was just this little move here. And then you had the bigger move that gave you that push to the upside. All right. And then here, as you see this range here, and this is why you wait because you want to see, even though this could technically be a break and retest, you still want to wait and see what's going on. You had this happening. Let me push this over some. You had that happening, so that could be a break and retest. But what solidified this situation was this. Once this happened, this created a demand zone. It was no, there was no more uncertainty about what's going on. Will it go down? Will it go up? Because price moved up. So got this demand zone. Price goes up, comes back into it, taps real quick, and that's all you wrote. All she wrote. One trade, 500 pips. So I know it's getting kind of repetitive, but it's good to see. Okay, here's one. This is one that's majorly important um, because you would have caught all this. Even though you didn't get the build up, you would have got it in the gapping of Friday to Monday, right? So you this demand zone. It's demand zone. How do I know it's demand zone? Look at what happened. This is the demand zone because you had all that straight up, and then it came straight down, right back to the same spot into the trade, and you would have got that plus this. So you wouldn't even have to focus on this if you got in here on Friday. Friday gave you this demand entry. If you got in at the high of London, if you got out at the high of London, it was 1,200 pips. If you got out at the high of New York, it's about 1,400 pips. Just by understanding, um, just by understanding that, right? Supply and demand zone. So, what else we got? Anything else I want to see? Yeah, I think that's about it. Just okay, one more. I'll give you this one more. And as you can see, I'm just looking. I'm not even using my regular indicators. I'm just looking at what the price action is saying. All right, now this day gave you 2,000 pips, right? So you had, let me mark this up here because this one candle blew past these lows. So this gap was blown. Price came back up to this area and it drops all the way down. One trade in London would have gave you over 2,000 pips by the end of the day. So, all right, guys, that's all for today. Hope you guys learned something. I'll post this to YouTube and then I'll post this to uh, the mentoring group. All right, you have a great day.